how to get this going. So let me just open up my slideshow. We are recording as well, so you can revisit this. Wonderful. Can I ask if everyone could mute themselves if they haven't already, just for the sake of the recording? And I'll do a mute all here as well. Awesome. So topics covered today that I'm going to look at are some of the basics of self-managed super funds, how to set it up, how to link an existing account to your SMSF, so an existing TFXi account, and how to grow your SMFS strategically. That, for me, that's kind of the more important one, is why we're doing it. I always like to look at the why, which helps me then decide if I want to, if this is a good idea or not, and then which fund managers to connect to as well. Again, disclaimers, guys, and I do need you to respond to this as well. So the fact is, I'm not giving you advice because I am not a financial expert, not a financial planner in any way, shape, or form from Australia. I am good at finances, but I can't give you advice. I'm just giving you my opinion, as we always do with this platform, and I need to be okay with that. It's my story, the stuff that's happening in the examples that I've seen take place from my experience, and support to the group in what we're doing. So please don't record this as well, just because of the requests that we've had from TFXi. We are recording it for you, but it will be on an unlisted channel. It's not a public view. It's only for those who are part of our group. If everyone is okay with that and this disclaimer, please put a 1 in that you are okay. You're good with this. I should expect 54 minus myself, so 53. Can't disclaim myself, can I? So if you can just pop a 1 in the chat group that we're all good. Thank you. Then I can move on. That's good. And this is good training for those who are in our QIBs, or those who are building the business end, or those telling other people about this wonderful fund. Please keep that in mind as well. You can't advise people, you can just give suggestions. Okay, we're not qualified under the Australian laws to do advice, and you can get into considerable amount of trouble because of all the issues that go around, and everyone knows finances are a very dicey subject. So let's get started. Some basics. Just want to get everyone on the same platform. How does SMSF work? A self-managed super fund is a private super fund that you manage yourself. They're different to the industry and retail super funds. When you manage your own super, you put the money you would normally put in a retail or industry super fund into your own. You choose the investments and the insurance. Some of the things to be aware of is that each year you need to value all your assets, have your accounts and statements in place, appoint an auditor, and set up an annual return. Now, I do this through my accountant, and you could do it. I would suggest that you talk to an accountant to get this done for you. What is the benefit of an SMSF? Well, lots of benefits that I found. Offers significant benefits in retirement. Trustees can potentially access direct shares, high-yielding cash accounts, term deposits, income investments, direct property, unlisted assets, international markets, collectibles, and more. If you can see on the right-hand side, there's a number of things you can invest in through your SMSF. We are focused on the managed funds, the international ones, which is the TFXi. So that's what I'll be mainly talking about today, but I am just setting a little bit of a platform here that we have equal footing on. Yes, thank you, Pops. It has to be an accountant with SMSF experience. Any good accountant, if they don't know, it will and should tell you under obligation that they don't know. So make sure your accountant does know about super funds, self-managed ones. How much money do you need for a self-managed super fund? This has been an interesting one. I get lots of different answers, varying answers from different people. But from my understanding, with the ATO, there's no minimum balance required to set up an SMSF. Okay, it usually becomes more cost effective, and that's probably more the decision you need to make once you have a balance of over 250,000 Australian dollars. Okay, that's about 175 or so USD. The reason for that is you need to pay the annual supervisory levy, ATO, to the ATO, and arrange for an accountant to prepare financial statements. The accountant normally then has an external auditor as well. as in we're doing in my case. And then you have tax returns, independent audits. If you decide to just have a trust where you are the trustee, that's a different cost. If you decide to have a corporate as a trustee, there's added cost to that as well. Okay, so just being aware of this information. Disadvantages of an SMSF, always important. Think of, do I need to really have this or not? Main disadvantages, costs associated with SMSFs, they are higher than your general retail one. And legal compliance obligations, expertise, and performance. You're basically taking on a responsibility of handling this yourself. Okay. Here's some other things to think about. Establishing costs. If you haven't established one, some of you haven't, ranges between 1,000 to 4,000. We're talking about AUD here, Australian dollars. More expensive to establish a corporate trustee, as I mentioned before. So keep that in mind. Talk to your accountant again or financial advisor as to the advantages of having a corporate trustee instead of a personal trustee for the SMSF. Additional costs include annual running costs, which may be variable, semi-variable, or fixed. An example of a fixed cost is the $250 you pay to the ATO a year. Auditor fees are semi-variable as they change over time, and costs associated with investments such as brokerage fees are variable costs. Okay, so just something to keep in mind as part of
Ruben, if
when you're wanting to set this up or you're running this.
Ruben, can I interrupt you for a minute, Ruben?
Yes.
The annual fee is not to ATO, it's to ASIC, $75 for super fund.
Okay. To ASIC, $75.
Yeah.
There's an ATO fee as well from what I've seen.
Yeah.
So isn't that $250?
I think so, but anyway, we can double verify that. Yeah. Okay.
Oh, so you're saying there's an additional 75?
Yeah, ASIC,
is that what you're saying?
Because your super fund is registered with ASIC, so they charge you a fee of $75 a year, which is way cheaper than a corporation will pay about around $300.
Right. Okay, good. And again, this information that I'm bringing up, guys, is general. Like, please go check with your accountant. I'm just trying to put footing, and what Pops and Michelle also will jump in and share just from my experiences, but you guys need to get checked up, check it as well. Darren, can you fund an SMSF with some of your existing industry super fund? The suggestion from what I understand is once we set up an SMSF, we move all our existing super into your SMSF. So I don't think you can have Ruben, both. Now that one I'm not 100% on.
Sorry,
Pops,
Ruben,
would you weigh in on that? Do you know?
Ruben, sorry if I just butt in there. Sorry about that. You can have a self-managed super fund and an industry super fund. You can have both, and you can move part of your industry super fund into the self-managed super fund. Not all. Yeah. Okay. Excellent.
Thank you for clarifying that. So, Pops, I don't know if you can hear me, because I did say you're welcome to jump in any. Don't apologize. Doesn't look good on the recording. No, I'm kidding. Just jump in. Feel free. Okay. Good questions. Do you pay tax on SMSFs? Yes, you do. The income of your SMSF is generally taxed at a concessional rate of 15%. To be entitled to this rate, your fund has to be a complying fund that follows the laws and rules of SMSFs. For a non-complying fund, the rate is a higher marginal rate. I've given you an example here on the right-hand side, where I've said, say, you've got an asset, and normally it's property you buy under SMSFs, but if you have an asset, your tax on investment, on your investment capital, tax on investment income can be a maximum of 49%, up to, depending on your personal income. Your 12 months capital gains tax, if it's less than 12 months, maximum 49%. If it's more, it's half of that. Now, if you're under an SMSF, it's 15% and 10%. Pops, I know you've said about no tax on profits. In my checkups, there's a varying information on that. Some are saying that we do have to, unless it's mutual funds. So that's something I think our accountants need to just confirm.
Yeah, we just, from my experience, I've been in it for since 2005. I've never paid any tax on my profits. I've only paid 15% on my contribution.
Could that be because of your age? You're past the retirement age.
No, because to 2005, I was in my early 50s. So it was, yeah, didn't apply. It's still the same.
The way I have understood so far is if it's mutual funds, no tax. Everything else, and TFXi doesn't fall under mutual funds, there is a 15% tax. But
no, you're
I'm new to
15% tax,
the setup.
No, Ruben, 15% is on your contribution. Let's say if you're earning $10,000 in salary, right? And if you contribute $2,000 into your super fund, you pay 15% on the $2,000, not on the money that you're earning as a profit in the.
Yes, I agree with that.
Yeah. Okay.
Good.
Anyway,
so we'll have to find out more detail on the.
Yeah. Get
Yes.
get advice.
Better to get clarification like that.
Correct.
True. I would suggest to everyone, talk to your accountants. I've just set up my SMSF. So I have to do a whole year before I can tell you what the case is for me. What if you're retired, you still pay tax on SMSF? It's a different working out on tax when you're retired. So I'm more talking about before you retire. Is TFXi a complying fund for SMSFs? Yes, you can use your funds in SMSF in TFXi to invest your part of your funds or all your funds. I would suggest only do part, and you can get profit from it, which I'm going to share in a few minutes, which I'm going to do now. Wonderful, good questions, guys. As you know, where this is a new ground for a lot of us, and we're just sharing what we know so far. And as we go along, we can keep updating. So your financial planner is also good to talk to. And what I found is by having this share group, it's excellent because I can actually talk to my accountant and say, so-and-so is doing this. Can you please check if this is correct or not? If it's a better advantage to me and for me as well. Okay, so SMSF and TFXi. Before you can fund a portion of your self-managed super fund in TFXi, make sure you have spoken to a financial expert about your financial goals, and ensure your self-managed super fund is set up and ready to invest from. So that's important before you go ahead with this. You can either set up an SMSF account in a new fund manager registration that you have not yet registered under your personal names. Now, for most of you here, if you've joined in the last couple of years, you wouldn't have probably jumped into funds like DS and Daishing, and then we've got a new one called Takami. Now, if you're going to set up an actual SMSF in TFXi, then you need to set it up as a new registration. Or you can request to change one of your existing registrations to the SMSF. But you can't have a duplicate. In other words, you can't set up, if an SMSF has your name in it, which is most likely because it's self-managed, and you have an account already, say, in Tokyo's Finest under your name, you can't set up an SMSF at the same time. Okay, so you'll either have to get your name changed to the SMSF name or set up SMSF in a totally different fund. Okay, that doesn't have your name or any of the trustees' names in it. So that's one way of doing it. The other way is what's more exciting to me and what I have done. Update for some people is you can choose to set aside one or more of your existing fund managers under one or more of your personal names that are also in your SMSF setup specifically for your investments. So in other words, I did not change the name of my personal accounts that are separated for SMSF to the SMSF name. I've set up all my wife's accounts in TFXi from the 1st of July to be under to be denoted as funds that are specifically for the SMSF fund manager. Now, this is done by creating a legal document called a declaration of trust. Okay. Again, talk to your financial accountant, but this is what my financial accountant has done and we went through and checked it with the auditor that it was okay to do. Okay. So from my abilities and from my understanding of setup, I'm able to now do this where I don't have to go through some of the, it feels like a rigmarole with TFXi when you're setting up company structures because they run under international regulations, and they're trying to now connect that with the Australian corporation regulations. So the easiest way I've been able to do this is just say, okay, all my wife's accounts, and I'll give you an example in a minute, from the 1st of July, any money contributed in there, I take out from my personal contributions, and then I put money in from my SMSF and run from that point. Okay, and as long as you have a declaration of trust and can show that if you're audited, that's a clear pathway, then there's no issues. Okay, so you got those two options to play with. I like what I've written in 3 on the right-hand side, much easier for me, and cleaner in terms of as long as I've got it, the pathway set up. So I'm going to give you 2 examples here that I want to more talk about why you want to set this up, and thinking through that process is the difference between aggressive and passive growth. If you're looking at a passive growth structure, then it's like if you just decided, okay, I want to look at something for retirement. I haven't really thought through how much I want in my retirement time. I've got existing super funds. I want to do maybe a small self-managed one and put a portion in towards in TFXi because it's going to give me much better returns. Anyone have a gander at what the returns were for the best industry super funds in Australia in the last 2 years? Anyone want to have a guess at what the returns were on average? You're welcome to pop a number in the chat group. Geez, 10% would have been good, wouldn't it? So most of the funds were about 3 to 5%, and 1 or 2. Yeah, there were a lot of negatives. Fewer around the 9-10% mark, very few, like 9%. Okay. Now, if I compare that to the ability to put into funds here, and so what my suggestion is, if you're looking at a passive growth, is to look at, say, the funds like the DS and Daishing that Kops mentioned at the beginning, and keep your other higher earning funds for your personal financial growth. Because remember, if you're in my age bracket, you haven't retired yet, you're in your 40s, 50s, you've got still some time to go before retirement, you can't access these super funds for your personal income. So you want to make sure that you keep that you still have access to personal funds through TFXi that you can access. So this is one recommendation. And here are some figures just around DS and Daishing, because I know there'll be quite a few of you that haven't seen this before with these fund managers. Now, they are less on average than what the others are Tokyo Finest, AMG, GMC, Yuri, and Nikkei are paying out. And as Pop said, the last cycle, we've had some better returns. But on average, we've had about 54% and 45% for DS and Daishing. Now, if I compare that even to the best performing super fund today, this is by far 4 times higher. Would you agree? 4 to 5 times higher. Okay. Fairly good win-loss ratio. These guys have been in from 2017, 2000, and 2019. They are the same traders, but they're from different registrations. So 2017, Daishing started, and then DS joined in, same trader under one of our main groups that had some other fund managers as well. Okay. So just an option for you as a passive growth strategy. I hope that makes sense. Could you guys put a 1 in the chat group if this is making sense to you as a growth strategy? So passive growth, haven't really thought about how I really want to make this work. But if I take a portion of this, it's going to be much better than my current funds are doing, because some of them are negative even, which has not been good. I'll give you a story of last year of one of our IBs who she had about, I think, 250,000+ in her super, and she'd only made about 3,000 in that for the year. And a lot of the funds that the super had attached to were negatives, as some of you have said. She actually made some money, which is good, but she calculated by just taking a quarter of that and putting tens of thousands. You can tell the difference, right, of how good this is going to be. Glad some people are getting ones that's making sense. Now, the other one that I'm more excited about that I do, that I find really, really exciting, is the more aggressive one. Okay, and this is a decision I've made. This is an example. I'm not telling you have to do it this way, but this just gives you an idea to plan forward. So I did some forward planning, and what I said was I'm going to do more aggressive growth. And so I have my personal account, and I have my mom's personal account where we do our main funds. Now, I always have someone under me, it used to be my wife under me, that has the bulk of our funds because of the rebates and the commissions that we get if you put someone under you, where you have the bulk of your money. But now I've moved all my wife's funds, Nicolay, Yuri, MG, GMC, Tokyo's Finest DS, specifically from the 1st of July for the purposes of SMSF. Okay. And so therefore it's a clear cut line, and I don't have access to the interest and the profits I get from this until retirement. Now, where this exciting is, I love spreadsheets now. They're so exciting. Say you have a personal decision that you want to start with $100,000 in your super fund, take 100,000 at 60% return. Notice it's a little bit lower because I've got the DS there as well. And how long will that take to grow to 10 million? In 10 years, I will have grown that super from 100,000 to 10 million. Okay, how exciting is that? Like, I can't see that happening with the industry funds, and I'm not in control of it. In the next 18 years, that'll become 472 million. Like, that is brilliant. Okay. Anyone excited about that? Or is it just me? Because I just think I love the numbers. If you can get the numbers working, it really, really helps you become more aggressive in what you're doing, and creating that. So my suggestion is start somewhere. Don't overthink things. Start somewhere. But TFXi has given us this amazing ability, apart from just getting the profits with our money, building commission structures, if you want to go into the QIB side of things, and tap into the 30%, is also to be able to do something like this where you get to grow your retirement fund as well. And you get to be in charge of it. Like, my accountant looks at this stuff and she just shakes her head and goes, wow, because this is far better than what any super fund is performing at. And the fact that it's been there from 2017, if you do DS and Daishing from 2017, never made a loss. You've got your averages of 40, 50%. How good is that? Okay. So this is something just, I think I've got one more slide and I'm going to finish off there. Okay, so if you want to set up your SMF setup in TFXi, so you don't want to do it like what I'm doing and you want to actually set it up, here are the documents and here's the process. Sign up using the link of your IB above you. So please talk to the person who got you in. If you want to say jump into Takami or DS or Daishing, then jump in there. Talk to the person who signed you up to your other funds and ask them for the link. If they don't have the link, get them to talk to someone above them and so on, so that we follow the culture of what we like to honor and do. Under the name in your application, you put your SMSF name. That's obviously, we assume that you've registered that already and it's running. Under the date of birth of the, put the incorporation date of the SMSF. This is how you set it up in TFXi if you want to go down the route of setting up an actual SMSF account. Under proof of ID, include the company extract of the SMSF plus the ID as noted in the SMSF company setup procedures or documentation, I should say. Under proof of residence, include the SMSF bank statement showing your SMSF address, plus proof of residence of all the beneficiaries. Remember, less than 3 months old. Okay. So when you're uploading the documents, under proof of ID, you'd upload the company extract, you'd upload all the IDs of the beneficiaries that are listed in your SMSF. So for me, it's my wife and myself. I'd have loaded both of that up as proof of ID and proof of residence. Upload the address of, so you'd have to make sure you have a bank opened up under the SMSF name, bank account, and then put up the address there. And your proof of address as well. Make sure they're 3 months old. Consent form just needs to be signed by one physical person. So beneficiary obviously is an entity, it can't sign itself. So one of the beneficiaries signs the consent form. Now, there has been a recent request, and this is why I decided not to go down this route, for the accountant name on the document to also show proof of ID and proof of residence. And that kind of puts the, makes it a little bit complex going and asking your accountant, hey, I need to put your details in as well for TFXi. So just be aware of that. That's hence one of the reasons why I didn't go ahead with doing it through the SMSF company. It just became too complicated, and so the easier one was just getting it through my personal account and keeping it like a direct relationship there. Wonderful. So guys, that's pretty much, I wanted to stop there, look at some questions, then Michelle will share her story and Pops will add anything himself. Any questions, comments? Has this been hopefully giving you some ideas on where you can step forward from here? Mill, so the question is, open account under SMSF, same open the company account in TFXi. Yes, it is, Mill. So basically, the same as opening an individual account. You just open an individual account, but under the name, you put the company name or the SMSF name. Pops, POI and POR is usually for trust funds.
Yeah, if you got an ESIC document, which is official from ESIC, then you don't need the information, additional document from the lawyers, because an accountant, the only reason they used to ask that is because when you put a family trust, because there is no proper ABN or ACN number, that's when they will ask you for those information. But when you got an official ABN or ACN, they normally don't ask you for the POI or POR. Yeah.
Okay, I do have someone who recently did and they were asked. Actually, I've had two in SMSF who asked, but
yeah.
I think
No,
that's
Michelle,
like a case
Michelle
now.
Michelle and I can confirm that. For me, when I submitted, all they needed was the extract from ESIC, the 4-page document, which has got must be less than 6 months old. It's got your superfund name, the date incorporated, the address, and the name of the directors. All are there. So that's more than sufficient for them. They don't need the others document.
When did you open yours, Pops?
Mine was about 5 years ago. Mine was 5 years ago. Yeah.
Michelle, when did you open yours?
Early this year, I think. It's probably been open about 4 or 5 months.
Yeah.
So I don't know whether it's changed in time, but yeah.
No, it hasn't. So 4 or 5 months is earlier than when this person was about, two of them were about 8 months ago. So yeah, they may have updated, which is good because that.
Yeah, they must have used their, you see, sometimes they introduce family trust documents which are created by the lawyers and accountant. And that doesn't have an ABN or ACN number. That's where the problem starts. But if it's from ESIC.
So good to know.
Yeah. So getting registered through ESIC is better. Yeah.
We have some other questions here. Still don't understand how we can link individual account to SMSF account. Okay, so if you don't register an SMSF account and you want to say link your existing accounts, then that are already registered in TFXi under your personal names, talk to your accountant about what is called a declaration of trust. And what that means is that you create a legal document that says these particular fund names registered under this individual name is solely for the purpose of the SMSF. I hope that makes sense. Can you have investors under your SMSF TFXi account? Yes, you can. So you can have others registering under you. So Pops, maybe you might weigh in on this one. I'm not still sure of how they handle the commissions that an SMSF might get.
No,
and,
you know, be careful with the SMS cannot be a business. You cannot use SMS for your passive income business. It's purely for your profits only. Okay. So if you're trying to set up an SMS and then you're putting downline people under, recruiting people under that, no, it's not allowed. SMS is purely for personal profits only, not as a passive business income. Be careful.
So what you might have to look at, like, so for myself, what I've had to look at is because I changed to a person's name who already has people under my wife.
Yeah.
The business side cannot be brought into the SMSF, but the
No.
profits are, but not the business end.
Yeah,
But it can
because
still have people under.
Yes, ATO does not
But it's
allow
not-
business under self-managed super fund.
So I hope that kind of makes sense to you guys. It's like the intention. There shouldn't be an intention to set up an SMSF and then set up people under you. But if you happen to have it like what I have, which is a few, then I have to have a very clear guideline that this is not producing a business. It's just producing profits for the capital in there, the interest. Michelle, you got anything to add to that?
No, I wasn't aware of that. So I'm actually learning that too. So that's really good to know. I haven't got people set up under my SMSF as yet. So I will direct new investors under my personal accounts.
Yeah, yeah.
So John, Dr. John, how much you need to have in your super fund before eligible? As you said, there's no set amount, but the recommendation is normally in excess of 200,000, just because of the costs of setting up an SMSF.
Yeah, I think just to give an indication, my personal experience is, for me, I had my own self-managed super fund now since 2005. The initial registration to set up the company through your accountant will be somewhere between $1,000 and $1,500 around that to get the ASIC registration and their fee. Then the annual amount again depends on the complexity of the investments you have in the self-managed super fund. Right, mine I pay around $5,000 a year to my accountants for my super fund, for them to do my super fund annually. Cost me about $5,000 because mine is a bit more complex. I got 4 or 5 different investment streams coming in. So the more complex it gets, the more you'll charge. But I think around 4, typically a simple self-managed super fund will not cost you more than about $2,000 a year in terms of administration charges, accountant and all that. So your income must be much higher than that. Otherwise, it's not worth looking at it.
Exactly. I would suggest 2,000 to 4,000 a year. Keep aside for your accountant. You might have to have an external audit.
How long is this going to go for? What's that?
So I'd suggest that keep that in mind. That about 2,000 to 4,000. If you're earning more than 4,000 in profits, then you should be probably earning double before you even go into wanting to see that take place.
Yeah.
Darren had a question. Defined benefit
just to reiterate, guys, if you have already got people under your self-managed super fund account in TFXi, only declare the profits you're making to channel the commissions you're doing into your personal account. Be careful, okay? Because ATO, if they do a due diligence on your account, then you can be in trouble.
And so what I would suggest as well, added to what Pops is saying, is be very clear with your accountant that streams of income you're getting from there. So your first one and only one should be the profits that you're making.
Yeah.
But if you have others under you and getting rebates and commissions, then tell your accountant, these is what I'm getting, but this is a business side.
Yeah.
And so your accountant then, if worth them their value, is that they will go and talk to the auditor and confirm with the auditor what needs to be done. And if they get that in writing, then you are covered. Okay. So I would be chatting with your accountant on this. Again, not to be stressed, set it up properly from the beginning. You have less issues later.
John,
Darren, you had a question. I have a defined benefit industry. I assume super fund is still better than defined benefit. I guess the question for you, Darren, is I'm not sure if you know the answer to this or not, is to find out how much your defined benefit industry super fund is returning, do a comparison. And again, guys, I don't suggest you take and put all your money into super fund, into self-managed super fund, into TFXi. As we always say, put no more than 20%. You need to do your due diligence on how much you want to invest. It is still a high risk we're putting our money into.
Dr. John, just answer your question.
Someone's question.
Yeah, just answer Dr. John said, does this mean you can add to your self-managed super fund from your other profits? Be very careful, because each super fund you only allowed to contribute a maximum per year. I think is typically if an employee is about $24,000 to $30,000. So if you exceed that, you need to be absolutely careful. Check with the accountant each year. I do normally beginning of June. I always ask my accountant how much of I've contributed this much. Is there any room for me to add more? If not, be careful because you cannot. There's a very strict limit on how much you can contribute every year.
Yep, good. Who is the auditor in this case? James. So as far as my understanding is, your accountant will have an auditor. The auditor is confirmed by the ATO and the ASIC to work with you, work to check that the SMSF is properly audited on the guidelines of the government. So there can be multiple auditors. There are different auditors that do this as a job.
Yeah,
The accountant would be the best person to
yeah. Each accountant have got their own qualified auditors for self-managed super funds. So they will appoint for you on your behalf.
Debaraj, then what happens if you want to convert one of your TFXi to SMSF with investors under you? So I think a few people now are suddenly panicking. Don't panic. What I would suggest is that you talk to your accountant, tell them, just basically suggest, this is the suggestion we would be understanding to make. I have a TFXi fund manager account, let's say Yuri. All the profits there are for SMSF. They return within the SMSF account. Any commissions and rebates, I'll have to now take out and do an internal transfer to one of my other personal accounts. Okay. Talk to your accountant and make sure that that's clear, that you're only, whatever your contributions are producing interest, you're not profiteering from this. And as long as the intent is not there. So one of the ways that they might check intent, and again, I'm not an accountant or financial planner, so I'm just going based on logic, is they will look at the timeline. So if you now start setting up new people under your SMSF, then the intent seems to be different than when you had set it up at the beginning. Okay, so you can say when I changed over or up to this point is what I did. From this point onwards, I'm not having it as a business. There's no intent in there. So the intent is part one of the criteria that they would use as well. I would also suggest, guys, don't if you're just keeping SMSF separately, set it up under like Daishing or DS and don't sign anyone else up. That's just like a separate thing that you're running for your SMSF, and then build your other fund managers up for your personal gain. Or take something like Tokyo's Finest or the new one, Takami, that we're telling you about, and set that up separately, and then use the other 5 fund managers for your personal gain. Let's look at some other questions. Freddie, so just to clarify, if I am the only member in SMSF, I can only invest 24K per year from the profit. So contribution, based on your contribution, because remember that if you're working as well, you have contributions going in. So your accountant, as Pops Matthew suggested at the beginning of a year, financial year, talk to your accountant, and they will give you some guidelines, and then you know how much you can contribute. I'm going to pass it on to Michelle just for a few minutes to share her story on this, and then keep asking questions in the group, guys, and we'll try and get to all of them and answer them as we're going. Thanks, Michelle.
Hi, everyone. So I just wanted to share what I've done with my SMSF, and I've used it to set up family members. So I've set up my children above me with my SMSF so that my kids are profiting and getting the commissions from the money that we then invested. So I'll just share my screen now. Bear with me 1 second. Can you see that all okay? Yep, great.
Yes, we can.
Because I'm going to talk about the commissions from the business side of it, that is how I've set my set my formula up. I'm just going to retouch briefly on the commissions so that you know what I'm talking about. So when you have 5 people underneath you, with a minimum of $1,000 each, you start getting paid commissions, which is separate to your profits. So here in this yellow box, when you have $40,000 underneath you, you get 20% of the profits. So you take 40% times, let's say your profit is in a cycle 7%. You then take that amount and times it by 20%. So in this case, it would be $560 per cycle. That is just straight commission. Okay, so I just wanted to touch on that to show you then how I've set mine up. So, I've put my daughter and then my son in 2 different funds. My daughter at the top in one, and my son and family members here, along with my super contribution. And then in a different fund, I've put my son there and family members and our super contribution. So then our kids are then getting the profit from their minimum 3,000 invest at 7%. Which comes in at about $210 a cycle. Then they get the profit sharing from me having my super under the kids. Now, of course, you don't need to do it for your children. It could be, another family member. Lots of ways you can set this up. I'm just showing you how I've done this. So the kids get 40,000 underneath them times 7% times 20%, which is 560. And then, of course, there's the 5% rebate. So they're getting just shy of $1,000 a cycle US, which, for my 18-year-old, thinks that's pretty darn good because it's passive income. But what's really exciting about that is how it then grows. Now, this is not perhaps the easiest to read, but I wanted to show you how in a way we're double compounding because the kids' money is compounding and compounding off the commissions. But then, of course, my 40,000 from the self-managed super fund is compounding. So I've started this here, cycle 1, with a $5,000 invest that the kids have invested. They get about $350 a cycle profit and $560 a cycle commission. So in one cycle, their 5,000 becomes 5,910. My 40,000 goes up to 4,280. Next cycle, the profit on 5,910 is 419. The commission on 4,280 is 600. So their initial investment of 5,000 after just 2 cycles is now 6,923. And my 40,000 superannuation is at 4,580, and etc. Cycle 3, profit on 6,923, of course, goes up. Commission on 4,580 goes up. Bang, 3 cycles sitting at 8,000, and my superannuation is sitting at 49,000, etc. So after just 12 months, the kids 5,000, of which they're not then contributing any additional money. It literally is just invest and set and forget. In a year, it becomes 20,000 from 5. And my superannuation has gone from 40 to 78. I mean, the returns are incredible when you start looking at the compounding. So not only am I getting the compounding from my super, I'm winning out, but I'm totally setting up my kids because that compounds really fast. Now, that's just 1 year. When you take this over 5 years, now again, I'm making a presumption here that we will continue to get 7% over the next 5 years. We don't really know, but hey, I'm making hay while the sun shines. So the kids' $5,000 initial investment, of which they're not adding anything to, in 5 years. lost my slide there, in 5 years is just shy of $1 million US. Now, for a 19-year-old, that's pretty an amazing way to set up my kids without it actually costing me anything, because I'll show you the next slide, my 40,000 invested from my superannuation in 5 years, and okay, it is based at 7%, just shy of 1.78 million. I mean, the returns are incredible. So I'm expecting in 5 years' time that each member of my family will be multimillionaires. Now, look, to be honest, we probably need to add on a year or two to these figures once you take out tax. But for my husband and I, we're only 5 years off retirement. So for us, it makes sense to put all of our money into TFXi, the money that we've invested in TFXi, most of it into self-managed super fund, because then I'm only paying 15% tax rather than a higher tax if it's under our personal name. So this is a massive win for us. And in a few years' time, when my husband retires from work, the tax advantages are better again when you start drawing down a pension. So I just wanted to show you these slides just to show you that SMSF is a fantastic way to boost your retirement funds. But, you know, if you set it up correctly, you can also really bolster other family members as well. Funnily enough, there's been a lot of talk in the group tonight about the recommendation for a minimum amount in an SMSF is 250,000, which is again what my accountant recommended also. But I've been talking to a few friends who don't have themselves set up for retirement and are quite frightened about their retirement because they don't have the funds set up. And so, you know, I've been showing them this, and we've been chatting about whether it's worthwhile, whether they're prepared to take a more aggressive approach and set up an SMSF for 2,500 and put a portion of their super in, even if they have well under 250,000, to go after figures like this aggressively, because they're in trouble regardless. So, but look, this has been really, really exciting for us as a family. It's working. As I said, I've been doing this for a number of months, and my kids' money is growing, as is mine, which, you know, I'm now telling them that they have to look after me very, very well when I'm elderly, for setting them up. But look, it's been an incredible blessing, and there's really some great ways that you can work this to really work your money. So I've been incredibly grateful to Ruben and Matthew, and Dr. John for showing me how to do this. Thanks, guys. Hope that helps.
Can we give Michelle a big virtual hand clap, please, guys, and an appreciation for her, because hey, you know, one thing I love about this group is that there's such a, with our admin, there's such a, what's the word I'd say, transparency. Bruce, can you do that again? I missed that. I like the hand clap. That was Michelle, that's for you. Padre was just doing a big hand clap. So excited. Can you do the woo? Yeah. Will you dance around, please? No, sorry. Sorry, guys, we just have a bit too much fun on this stuff. So I really appreciate Michelle, and if you can just give her a big appreciation as well. The reason is that the transparency to be able to share things, not after we've achieved success, where that process is old now and you may or may not achieve it, but it's as we go. If we're seeing success, we can say, hey, this is something we're looking at doing. You assess it yourself. This is something we are doing. This is some of the results we're getting. Assess it and then make some decisions. And what I love is numbers don't lie. If they're on the spreadsheet, they're working for somebody else in the platform, why wouldn't they work for you? Because we're all getting 60% returns. And with the new fund, Takami, we're getting 65%. It's brilliant. The numbers work. Pops, you had something as a response to Kara?
I think, one of the things I was going to say from based on what Michelle has just said, hey guys, when you go and see a professional wealth planner, they'll charge you thousands of dollars for the kind of advice, the ideas that you're getting here. I think if you follow Michelle's style of structuring it, it's a win-win for both individuals as well as for the self-managed super fund. It's a win-win. It's a brilliant way she's done it, and it's a good eye-opening for each of you, right? And what I'm trying to say is that the other thing I want to say is that don't confuse on what the tax you pay. The tax you pay is only on contribution, not on profit. Anyway, double check with the accountant. My experience is you don't pay on the profit. Second thing, when you contribute, the limit you have on the is a contribution around 24 to 27,000. But the amount of profits you make and you reinvest, there is no limit. Okay, so don't confuse between the contribution and the profit that you're making. Profits because it's already based on the money that you've already invested in the self-managed super fund. So you're making profit from that. There's no restriction on that. But it's only on the annual contribution there is a limit. So you got to be careful of that. I hope that makes sense to you guys.
Thanks, Pops. So an example is that you get 100,000 in a super fund, an industry super fund, and it's making 3% return. They'll be having about 3,000 profit a year that they'll reinvest, take out the fees and all of that. What we're saying is do the same thing here. You're looking at about a 50% return. You're making about 50,000,
correct,
not 3,000, and all that 50,000 limit. In fact, you can't take that and use it for yourself personally. You can take it back into the self-managed super fund bank account, reinvest it in another part of SMSF, but you can't take it out as a personal profit. Does that make sense? So
that's right.
Reinvesting it and going is perfect, and you're getting 50,000 as an example rather than 3,000. Why would you not want to do that? And just if I understood what Kara was asking, starting at 40,000, but isn't it 200,000? When I first started in TFXi, my accountant said it was a bad idea. When I'm growing to this point and I want to do SMSF, my accountant said, are you sure you want to do this? Look, at the end of the day, I take what they say, I assess the risks. I talk to people like Pops Matthew, he's retired age. He's gone through this since 2005. Was it, Pops, when you started your self-managed super fund?
Yeah.
So he's got experience, and I listen to him. He's not giving me advice, but he's giving me experience. I then weigh everything up. I do my own numbers. I take my risk. So accountants will give you their thoughts, and as long as you're crossing all the T's and dotting all the I's from a financial perspective under the government regulations through with the ATO, then you're fine. It's exciting. Lots of accountants do not have an idea. So what I can suggest is talk to some of the people who brought you in, who might have an SMSF set up and who their accountant is. Go and talk to some of the accountants that we have. You're welcome to talk to some of the accountants around and then see which one you can go with. Yeah. Like, I don't see why you can't have a different accountant for SMSF to your personal account for other stuff, or you can combine the two. So if an accountant doesn't know what they're talking about, go to one of us can tell you about our accountants. There's no problem. And we don't get a kickback from that, by the way, or at least I don't know about the others. I'm just happy to help.
Stephen, regarding
can I share my accountant's name and number?
Yes, Stephen, your question, can self-managed be set up on the same TFSF fund as my personal? No, if your name appears in the self-managed fund, you cannot have your name appearing twice in the same account. So it's got to be either you change it, or as what Ruben was saying, you set up another account, maybe one of your wife or someone, and then you get this declaration done with your accountant, and then put the money into that. So anyway, listen to the recording. We covered all this information. So it's all the information you need is already covered.
Let me add to that. You can't just set up anyone's family name under you and use it as a self-managed super fund. It has to be a family member that is in the SF as a member.
Correct.
So, for example, my mom is retired. All her funds are going to be now under, because that just looks too dodgy. It has to be somebody who is already a member in your self-managed super fund, whose personal name is now in TFXi already as an account. And you can say, okay, I'm going to use this, and it's clear, and you sign the declaration. If you want.
Sorry, iPads is how did Michelle have her kids on top? Well, she set up her kids first, then only she set up the super fund. So that's the way she structured. Okay.
Yeah.
Yeah.
Had a good strategy from the beginning.
Yeah, from the beginning.
iPhone. I like the fact that we're calling this person iPhone. iPhone, could you just change your name? I'm feeling like every time I'm looking at my phone and saying, "Hi, I'm not talking to you, iPhone." Absolutely. Matthew, thanks, Michelle. Matthew and Ruben experience are more helpful in my account in the setup. Yeah. As I said, be well informed, guys. Like, if you want to hang, like the rich in Australia and around the world are only a very small percentage. I don't know many rich that are willing to share information. And I love this platform because people are willing to share information here on how they produce their income, because it's enough to go around for everyone. And so make use of such things. It's very hard to find people who are willing to do that, and at no cost. Like everywhere, wanting everyone to grow together. So I would be asking questions. Some people have asked me for my accountant's name. I'm not going to put it here because I don't want her to get inundated by like 20 phone calls. But if you reach out to me specifically, I'll have a chat to you, and then I'll send her your name and vice versa. Just because I think that would be the better way to do it. But happy to get you to talk to my accountant.
Or my accountant, if you want, not a problem.
Yep, and exactly. We've got enough accountants, I think, here that can do this. Pops, Michelle, Dinusha. I know there's a few here that have set up SMSFs that are happy with their accountants. If any of you are confused on what to do, I'd suggest that you have a chat to one of us to talk about the structure of why you want to do this. So look at the why, and then create a better platform. Okay, because it can sound confusing. So just be aware of that. Yeah. Don't blow him too high up, because you need him for the next financial year. And I've been doing that with my accountant too, blowing him out of the water. And then now I changed to this lady who's feeling the same.
No, Kara, we don't use any financial advisors. Our accountants are good enough to give us some guideline. We're more interested in the guideline with ATO than anything else. So you don't really need to, the accountant, if you've got a good accountant, he will be able to advise you.
Freddie, you can have more than just TFXi amount. So just imagine you've got your self-managed super fund, you've got 300,000 sitting in your bank account, your self-managed super fund bank account, say in ANZ Bank. You can then distribute those. You can take 50,000 of that and put into TFXi. You can take the other one, another 100, and put it as a down payment for some property. So you can, just like a retail super fund, you can distribute your funds to wherever you want to invest in, and it's your decision that you make, as long as you follow the guidelines and the rulings that are required by a super fund, by a self-managed super fund. Hope that makes sense. Kara, just to add to what Pop said, I guess I read your question as, do you have financial advisors that you use with TFXi? Any of my financial advisors I talk to aren't like, their response initially has always been, this is too risky, don't do it. And then over the years, as I talk with them, they struggle to kind of get their head wrapped around this because it feels too good to be true. So I get advice from them on how to make sure I comply with all the guidelines, tax guidelines, and any corporate guidelines if I'm using a corporate structure. And then I have to make my own decisions. And so having a group like this has been really helpful to me to see what others are doing as well, because none of us want to do shifty stuff here, as in the leadership and the administrators. None of us are here to do shifty work or to advise you on anything like that. The integrity for us is, we give to Caesar what we owe Caesar, but if we can minimize tax, not evade tax, but we do want to minimize it, because anything I minimize personally, I can use for our Project 61 work. Yeah, Bruce, you're happy with that?
Yeah, iPhone. What's your name? Sorry, iPhone. What's your name? Can you type in your name here? I want to change your name.
iPhone. I've got an iPad as well.
Yeah.
Keeps getting.
What's your name? iPhone. You're saying no. Sorry, you can't just talk to your financial planner, because they still need an accountant to help you to set it up. So they don't have the power to set it up for you. Just to let you know.
Yeah, and iPad is right. Not all accountants are specialized in setting up SMSF.
Yes,
so
correct.
keep that in mind. Thank you,
There are
iPad.
a couple of
Pops, I
iPhones
think
here.
God's saying
there are-
something. Time for you.
There are 2 iPhones here. Yeah. You see, you have iPhone, you get confused. That's the problem.
Oh, I'm excited. Woo-hoo! Yes, see, I told you Bruce has come over to the bright side. When someone looks at these recordings, they're going to be laughing at all of us and thinking, what? Are these guys serious about their finances or not? Yes, we are. Very serious,
I
guys.
just bought a new Google Pixel, brand new. Awesome.
And and his camera off
It's
while
got
it shows
one
that.
of the best cameras. Yeah. There you go.
Each person can update their own name within Zoom. Yeah, they can, Darren. Unfortunately, not everyone knows how to do that. So we try and help out when we can. Wonderful. Guys, if there's hopefully we've answered everything. Hopefully this has helped you in just the next step. As I often say, if you're confused, you're ready to learn. So don't be stressed if you're confused. You're ready for the lesson. And if you're frustrated, you're ready for your breakthroughs. So confusion is not a bad thing. It just allows for us as students to go, okay, I need to get clarity on this. And asking questions is something that we're very open to. We don't see any question as a dumb question. Sometimes you may have one of us say, we've already said this before, and then we realize maybe you weren't in when we said this, or it wasn't relevant to you. So we'll say it again. So we're all here. We're building up an admin group as well to help out. So we've got more people contributing to one another. It's good seeing you on the platform, helping one another with answers. If an answer is incorrect, we'll come in and add correction to it if it needs to be. But I love the fact that we support one another and we try and keep on top of things here. Is there any meetup in Melbourne, as in a physical meetup, Andy Bob? Maybe you might be the first to start that off. Oh, Androids are the best. No, Andy, I'm not going to meet with you since you said that. Androids are the best.
Yes, Simon, I'm actually in Croydon. Yeah, we can probably meet up for a coffee sometime, maybe next week if you're free. I'm okay with that.
Yeah, he's got an Android. So Andy Bob, you can go meet Pops as well.
Now I've got 2 iPhones here. Which is Simon? I'm not sure.
I think he's playing with you. I'm going to change my name. Look, I'm change that to iPhone as well.
I'll change mine to Pixel, and then that's it.
How's that?
Okay, guys.
Papa Luke. From Papa Luke, before we finish.
Thank you, guys. I'm the iPhone guy.
Okay. So you, is that Simon?
Name.
Is that Simon?
It is you, Matthew. It's me. Yeah.
Okay, I'm going to change your name.
Yeah, that's okay. I'll get in touch with you in next week to have a chat because we're not too far away. That's all.
There we go.
That should be good. Yeah.
Yeah, Ruben.
Simon,
what a night.
Thanks, Papa Luke.
I couldn't talk much because I'm at a friend's place having dinner surrounded by 20 other people. So that's right.
Hey,
I'm trying to listen.
let them. Can we? Why don't you put your on voice on loud voice? We can talk to them about TFXi on your behalf.
Yeah. Well, let me do my own work on them so I can make my own profit.
Bruce is laughing there. His opportunity missed.
Yeah.
The good thing, Simon,
just
is
sign them up. Just sign them up.
Yeah. No, they're taking their time.
For you, and you get all the profits. That's what I love about this dude. He'll do everything for you, and he'll sign them up all on. He never solicits anyone else's time. So
I'm getting there. I'm getting my 5th soon, so hopefully it'll be all right.
Awesome. Valerie, we don't know anybody that in Sydney who has opened a self-managed super fund. Is there anybody here who's in Sydney who's opened a self-managed super fund account with TFXi? Can you just put your name here? Otherwise, I'm happy to recommend our accountant, but they're in Melbourne. I don't know whether you'll be comfortable with that.
I do all my accounting. I hardly meet my accountant in person.
Yeah, exactly.
So,
exactly. Yeah, I hardly go. I've never been to the office for more than 2 years. So there you go.
There you go. I think Papa Luke was starting to say something and he got interrupted. Papa Luke, you have this flow. It's yours.
Yeah, just to say this is another it's well presented. I think it comes across really, really great. There are a lot of things, we don't know about. And this has become such a place of helping people and really showing people the right directions. Yeah, I think it's worth it.
Thank you, Papa Luke. Awesome. I agree. Absolutely new stuff that we should be aware of. Padre, so for those who don't know, we're kind of like 4 implementers out of 5 here that are part of Project 1, and like our friendship goes beyond everything, and we're so different in some of our viewpoints. So this is the guy I talk about who's the most skeptical when we got into TFXi, and I love
exposed.
And I love that because I always say if something is too good to be true, let's find a hole in it, because then it's too good to be true. And if the skeptics can't find the hole in it, then this is a very good to be true platform. And so I'm excited for people like Padre because he really makes sure that he's protecting all of us as well. And I love that. Padre, anything you want to add to this? It's good to have you on, bro.
Yes, it's nice to be here. I was so just from a personal perspective, obviously my journey with the TFX funds, managed funds, and the platform has gone from being just totally risk adverse and totally skeptical about the whole thing, and then so slowly dabbling and feeling a bit more encouraged, and then totally inadequate at signing anybody else up for some time. I watched the recording the other day of the sign up thing, and I realized that I've adapted and adopted a lot of those fundamental principles that Ruben was talking about. So it's not so hard anymore. And I can't believe I'm saying that because it used to be just borderline impossible. But I'm really, I've been really disappointed with the sort of work-related super funds over the last 15 years. So it's not just a recent thing, it's been a long-term level of disappointment. And recently have been looking at moving some of my work-related super into a better performing fund. So when this was discussed, I thought, well, I'm gonna have to stretch myself again, learn some new stuff, consider it, go about that work of just reviewing it and doing that, calculating your own risk and appetite, which is really, it's one of the parts of this that I really appreciate. Others have said it, but people sharing information, sharing their experiences, sharing their stories. I remember when I first started and I started talking about, we used to see about 30% from GM and SM and Victoria, and I worked out a way to turn it into 35 or 45 by just fiddling around and I was so excited. And then we'd get on these different chats and just share just the story. And then there was the compounding stuff and just realizing that every time, and Ruben uses this phrase a lot, but when you make others grow, you grow as well. I think I'm like, it's going to take me a little while to process this particular part, but I think it's actually like when I think about the percentages, like you pay 15% on the investment stuff, but then you don't pay anything on the profit afterwards. That's like I've got a couple of friends, like senior guys who might have a couple of years left of official work, who are starting to invest in TFX as a form of just literally being able to survive in the future. There is a little bit of stress on the economics in Australia. Most of us here would know that. Nothing compared to other places, and we're not pretending that we're suffering, but That locally it's considered stress. But I'll be really interested to share. Yeah, I might even have to sit with them with the recording and just say they may want to shift something into a self, like they're just starting to invest. I've got one guy who's like 70 plus, and he's looking at, if I did this amount in 5 years, I'd have $1 million. And I go, yes, that's right. And then I go, but how are you going to get it back into Australia without paying tax? Like, you know, you can make $1 million, but if you've paid, you know, $510,000 tax, that's not a particularly good strategy. But if he turned it into part of that into a self-managed super fund, that's going to change that dramatically. And I think that's really part of their questions, especially for people in the more senior bracket. And I'm sadly, with the color of my hair, starting to approach qualifying for that age group. Luke,
Already
you're
on
not
your
supposed
chin.
to
It's
laugh
already
at
on your
that. Yes. And so I'm not sure I'm in a position where I can leave it for too much longer. But I mentioned it to Ruth, and before I came on, and she's been watching our super money and etc. and her own, which is rubbish, and thinking, well, maybe it'd be a good idea. Again, it'd be doing the sums, getting all the ducks lined up in a row, making sure it's legal, making sure it qualifies. But yeah, Michelle, that was really helpful material. Thank you. And just watching, I do like a good spread chart and seeing how things multiply. It will take dedicated work, but I think that initial stage of setting it up would be more than worth it. So yeah, it's annoyingly interesting, because I say annoying because it means I'm going to have to do something. So yeah, thanks. Appreciate it.
Appreciate the contribution. What an excitement. This is exciting, guys, to see where we can journey. Some of you are asking what's the first step if you haven't started yet. Freddie, thanks for asking that. I'd suggest before you go and start setting things up and paying money is to just have a chat on the why you want to do this. And talking to a financial planner is a good that we have to advise you to do, because we can't give advice. But talking to someone who's doing this and doing really well in it, and you've got the Michelle and Matthew and myself who actually can say, hey, we're willing for you to have a chat and ask the question why you want to do it, and then set up some of the strategies that way. So I'm always happy to connect with you guys, have a chat on a one-on-one and ask some of the questions. Or if there's enough of you here that want to have a Zoom meeting, we can connect on the Zoom meeting and ask the question, why do you want to do this? Like, what's the financial advantage through the year? We ask some questions over the next 5 years, 10 years. Is anyone interested to have maybe a collective Zoom meeting where we look at, okay, what's my next step in this journey? If I'm just beginning, is it worth doing before you start putting money out? So I've got one yes. If there are enough, like 5 or 7 people who are keen to do this, we could just connect in a group like this, because you probably have similar sort of things. I'll set up some questions that I normally ask people to help assess it. All right, we've got a few. So we'll organize something. We're planning on our trip journey back from Kenya to Australia over this in the next 7 days. We've got a few stops on the way to go. So it'll be sometime in the next 3-4 weeks that I'll organize something like this and then work from there. I don't know what these two goons are up to.
There's a private chat going on here. That's all right. Don't worry. But without even typing, we know what we're talking about. You know, we just reading each other's mind. Hey, but okay, yeah. Just coming back to what Ruben is saying, we are more than happy to help you guys, give you some guidance. There are some very pertinent questions needs to be asked, so that you can then decide whether you're in a really qualify to set up a self-managed super fund. Okay. Again, as I said, we are here to give you advice, just suggestions, not advice, suggestions. That's all we can do from our experience, but you still need to follow up with your own accountant to make the final decision. So, but we're happy to give you some guidelines on those areas. Yeah. All right. Anybody got any more questions?
My
I was just saying, I
question
wish
is,
someone-
why is Ruben calling us goons?
because you're over there,
I think
far away
because
from me.
you know, Bruce, because he's missing out on what we're sharing. That's all. That's why.
Love you guys. Okay, well, wonderful. Michelle, thanks again for sharing. I think it would be. I would love for you to maybe share this in more detail again another time, because I think this is just like hearing what you've had to say throws out these ideas of have I thought about some of these things, and then now sharing it again goes into the details. So maybe something we could do when we do a one group chat catch up with the next step. Maybe have you on as well, Michelle, if you're okay, and just go into more process of why you did this and how it's beneficial to you. Thank you, Pops. Thank you for your contributions as always. And we are who we are because you've helped us along the way.
Somebody has helped me, so I'm helping you guys. That's all. We all appreciate that. You know, the good thing about us here, we don't hold back good news.
Yep.
Right? Good news. Jesus shared the good news, and we share every good news that we receive that we want you to be shared, because we want everybody to celebrate. That's what it is.
Yeah, and I want to say that I love the culture of that, because I leave here from Kenya after 6 months, having made such an impact that TFXi has been so big in being responsible to help fund those things. Like we've seen so much in prisons, having been able to go and visit people there, people who've lost their limbs, like little kids and older people, seeing operations done, that little things that we would take for granted in Australia, and having TFXi have that backing of it, where being able to talk to a community and say, so if money is not the issue, what's the solution? And I love that, the ability to do that, and then move them from not being dependent upon us to saying, hey, would you like to do the same? And I love the fact that people are not saying anymore around us, I want to come to Australia because it's better. They're saying, can we do what you're doing? And I was like, yes, 100%. So guys, this is great for anything in your lives, but for us, it's made an impact in impacting others as well. So thank you for being a part of a great thing. Have a great night, everyone. I don't know if
If Papa Luke and Bruce can stay back 10 minutes just after these 10 minutes. Yeah.
Yep. And also, Michelle, just want to do a quick debrief, and then Michelle will have to, it seems like we're kicking you out of the room after that.
We're having a party after that. We're having a virtual party after that.
With iPhones, Pop. So
Thank you guys. Good night. God bless everybody. Have a wonderful weekend.